Hello and welcome to another update video about ADA. Yeah, nice recovery today. However, the recovery, which shows here as around about 9 to 10% on Tradingview, is too small to be really evidence that a substantial low has formed. But it's important to say that the price has formed that one more low that we were watching for in yesterday's video. You might remember that I shared with you resistance yesterday, which I have adjusted now, but the price reacted to it yesterday and formed that one more low that we were watching. And actually, the price has reached the 100% extension level, which is an important target level for this move down. So again, we're tracking a corrective pullback here, A wave, B wave, C wave, and the C wave is a 5-wave move, which could be completed, right? Which could be completed, but it's too early to say it is. Okay, so it's I think we've arrived at an important inflection point. I shared with you the last few days already the wave counts here. They haven't changed at all. If the price needs another low, which the risk is high for that, the risk is high for that 84.6 cents. 84.6 cents is key resistance, right? So as long as we stay below that level, the price could easily get another low. So that's the main level we need to see broken, especially or ideally even in 5 waves. Until we get a 5-wave move and break above 84.6 cents, there's nothing to suggest that a low is in. Actually, you can see we're still printing lower lows, lower highs. All I'm saying is, technically speaking, the 5-wave move down here is done in wave C. So we still have to be mindful that the price is still printing lower lows, lower highs, but it's reached an important spot, like this 100% extension. And overall, as you can see, if we zoom out, this is still a broader range. And we have still additional support levels in case the price needs another low, around 61 cents, 59 cents, 56 cents are the next levels. And there is one important level, a structural support around 58 cents. I'm still tracking 2 possible scenarios. Again, they are still valid. So we can say that a substantial wave 4 bottomed here potentially on the 3rd of February. To keep that scenario alive, which is only a working thesis at the moment, the price must really hold above this, above the 50.9 cent level. Well, that's the formal invalidation point. But there are obviously, as discussed yesterday, levels that if they break will reduce the likelihood that we get upside follow-through more directly in this scenario. First level is the red line here because it would rule out the yellow scenario. I would not really focus on the yellow scenario anymore if that B wave goes below the beginning of the 3rd wave. That's not really how it should work. That's at 58.2 cents, invalidation point for the yellow count. And the white count, which is just a different structure, it's instead of a diagonal pattern, an ABC structure. Okay, so the yellow count, just a reminder, is a diagonal structure. Wave 1, wave 2, 3, 4, 5. So we've got a 5-wave move up. And in this scenario, this B wave might have bottomed. And it's wave B of 3 because it's a larger diagonal. And also the wave 1 is an ABC structure. You just don't see it that well here. And the other count is just a large ABC structure, not the diagonal. It just depends on how I interpret the macro count. Here we have an ABC structure in wave A, a larger B wave pullback, and then a C wave rally from there. They have very similar support levels, just that the white count could go a little bit lower. So I would give it a little bit more space. I would still allow it to make another low from a bullish point of view. But please note, this is all not high probability until we really get minimally a break above 84.6 cents. And please note that we are in a broader range. So this is all choppy price action. There are no impulses to the upside. Therefore, I'm just showing you here key levels where the bulls could step in. This is not that we have very clear probabilities for higher prices. Still, though, something I'm watching for, but with low confidence. Okay, that's very important to understand. So you've got the quantitative analysis, you could say, with the numbers. You've got the objective levels. You've got invalidation points. You've got the structure. And then me telling you from a qualitative point of view, it's low confidence. I need to see some price action that would confirm a low in place. Meaning we have to be careful still. And as I said, if we could easily get another low, and then 61.59 cents, and very important here, this last swing low there at 58.2 cents could be tested. what to watch out for today, you could also pay attention here to a trend line that's coming down. So we're currently testing a trend line there, which is something that might lead to a small breakout. But if we break out, we could just get rejected from resistance. So that's something to keep in mind. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure you follow us on X, on Twitter, for additional content, short-term content, mindset stuff, real-time discussions about charts and so on, that you find that on X. And if you want more in-depth content, in-depth analysis, reports, and member videos, live stream access, check out our membership. Thank you very much. Bye-bye.